One of them is basically since the invasion of Ukraine by Russia itself, and thereafter the seizure of Russian assets by the US and its allies, sent a very strong signal to many countries, whether friends or foes of the US and its allies, that holding on to US dollar denominated assets has some counterparty risks. And that, which is, if you ever fell into the bad books of the US and its allies, there's a risk you may lose your assets, i.e., being seized, whether it's in banks, whether it's sitting somewhere in a country which is considered to be hostile to you, and so on. And so gold is one thing which countries find that you can't, as long as it's not being put in a vault in a country which is considered to be hostile or enemy, it is yours to hold, and no one can take that away from you. The second other thing is there has been a move away from the US dollar, whether because of China and some other countries looking for an alternative away from the US dollar, or because people have become quite weary with the so-called debt level in the US, reaching almost about 30 or 40 trillion dollars itself, which suggests that basically the US in the future will start to have to print, will possibly have to print money in order to pay off financing its debt, interest and so on. And that obviously will lead to a debasement of the US, anybody holding to US dollar, and it will reduce the value of the dollars that you're holding. So all of this add together has forced the hands of central bank to come back into the market to restock their gold holdings in their so-called international reserve. So that has been the main thing that has been driving gold, at least over the past 24 months. And in the past 12 months, we've seen the speculative side come in to the markets.